Hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. Can you guys hear me and see me okay? And can you see my screen okay as well? Administrator Adinda, hi. Okay, brilliant. Can see my screen okay? Okay, yeah, okay. So when I switch to e-signal, you can see that okay as well? Yeah, okay, fantastic. All right. If whoever's out there, guys, if you could all give me a quick hello. Let me know who's tuned in. My name is Zaheer Anwari. I'm a trend trader. I've been trading since 2007. FX Street for, I don't know, it could be 2 years now. Actually, I'm not 100% sure. It seems like quite a long time. So if you are tuned in, please say hello. Usually in these webinars, things are done a little bit differently. It's not a day trading scalping perspective. I try and educate people away from that approach. Don't expect instant gratification. A lot of the time, people get into trading and they sort of bounce between one short-term trading strategy to another. It could be on a 4-hour, the 1 hour, the 15-minute time frame. Just tend to go around the houses and don't really get anywhere. And the penny never really drops that day trading is not the way forward. Very, very, very few people make money from day trading. Most people end up just failing and then giving up because there's no consistency in day trading. So in today's webinar, we're going to do a little bit of analysis. So for the guys that tuned in, so if anyone's out there, I don't know who's able to type into the chat box, but if you are able to chat, and let me know who's out there. Okay. So if you do like what you hear today, and if you do want to take this further, if you do want to pursue trend trading and getting a little bit tired with the inconsistency of day trading, then please check out the following link, trendtrader.pro/app. This is the apprentice training, and this is where we go in depth into trend trading strategies, risk management, compounding, market conditions, stocks, foreign exchange, commodities. There's just a lot that goes into this. So, and if you have any questions, by all means contact me. Okay, so let's go into e-signal and let's do a bit of analysis first of all before I cover. I feel really important, and this has really come about from a conversation that I've had with someone. As a trader, people should be able to define what is known as an edge. Okay, you must be able to define your edge. If you don't know how to define your edge, that means you don't have one. It's very simple. And if you don't have an edge, you're not going to be consistent in trading. An edge is really what separates the smart money from the guys that fail. All right. And so we're going to go through today how I define an edge and how I break down my edge. Okay. So if you guys are going to find that useful, can I get a quick yes or hello at least? There's nothing coming through the chat box at the moment. I do find that a little bit unnerving because I don't know who I'm talking to, and sometimes I feel like it's just myself and Adinda, and I'm sure Adinda doesn't really want to hear my voice for the next 45 minutes. So if there's someone else out there who wants to get involved and say hello, then that'd be much appreciated. Thanks, Adinda. Okay, so let's do some analysis. Aussie dollar, US dollar, monthly chart, weekly chart, and the daily chart. So as a trend trader, I'm looking for these long-term opportunities in the market. On the monthly chart, I have my major levels of resistance highlighted by the red, and the green highlighted by the support highlighted by the green. So these are my major levels of support and resistance. These pink lines, these are the annual levels. So that's the high and the low and the close of 2015. So this is the high and the low of the previous calendar year. Again, these act as support and resistance. In addition, when it comes to explaining my edge, you will understand that I use these pink lines as a way of determining a bias in price. So ultimately, if price is trading between these pink lines, I generally stand aside. What I want is price trading above, so that price will have a bullish bias, or below where price has a bearish bias. If it's inside the pink lines like it is here, then generally I stand aside. Now, on the weekly and the daily time frame, this is where I'm looking for the trend to be in alignment. So I want the weekly and the daily directions by using 200 averages below both these moving averages in a bear market, both on the weekly and the daily, or I want price to be above both moving averages in a bull market, both on the weekly and the daily. If we don't have that, then we stand aside. So if we have a look at the Aussie dollar, US dollar, prices inside these pink lines. And for that reason alone, I don't want to be looking to take any trades. However, if we do more in-depth analysis, we can see that price is below the 200 and below the 50, although it's coming back to retest it, which is fine. It's natural after a break. It likes to retest it. But price is below the 200 and it's around the 50 level. Price is below the 200 and below the 50 level. So we are starting to see alignment between the weekly and the daily. Price is really sort of testing the 200. Look how flat the 200 is. Daily chart, you can see that the daily is just going sideways and the 200 is flat and the 50 is generally sort of sidewinding. I know there's a bit of an angle here with this mini sort of trend, which was short-lived. The reason why that was short-lived is because price came to a resistance zone with the round number 0.80. And you can see if you look here, there's various levels of resistance. So price came to a resistance zone, failed, and has headed back down. And you can see that the moving average is now confirming that. All in all, as prices within the pink lines, we really want to be standing aside. Go to the US dollar, Canadian dollar. And we can see now, this is a situation that there is a bit of trend heading down. There's a move to the upside. Now, the reason why there's a move to the upside is because test the round number 1.3. That's all it is. Okay, and we've got this pivot resistance. So we've got a resistance zone. After every move, there tends to be a correction. This is nothing more than a correction for now. If price continues up, then we will be seeing price continue in the long-term direction of the trend. 1.3 could also hold strong, and we could then also see further weakness to the downside. In no man's land at the moment. On the weekly time frame, price is below the 50, above the 200, 200 above the 50. So you can see the weekly and the daily are doing opposite things. So the smart scenario now really is to stand aside, because clean trend to the downside. After every move, price goes into a correction or a consolidation. This is what price is doing. It's come back to 1.3 resistance zone. What we're now looking for is correction to the downside, a break and a close below here, and then further weakness. But we've got to be careful. There is the low. We've got the weekly 200 moving average all acting as support. So if you are looking to take any short trades on this, then I would reduce your risk. Okay, so euro dollar, again, you can see it's still within the pink lines. It's come back to find this support at the 50 moving average, support at the 200, below the weekly 200, below the weekly 50. So you can see that, again, there's no alignment. First of all, it's inside the pink lines. It's between the 200 and the 50 on the weekly, and it's between the 200 and the 50 on the daily. We want to see price either above both of these or below both of them, depending on which direction you're going in. So above both in a bull market, and that's on the weekly and the daily. So we want to see alignment. Here we want to be below both in a bull market, and you can see, in a bear market, and we can see that price is predominantly in a bear market. After every move, there's a correction. Out of this correction, we favor a breakout to the downside. Okay, euro pound starting to look interesting. I'll explain why. We can see that it's within the pink lines, so it's not an environment we want to be trading in just as yet. After every move, it found resistance around the round number 0.80. We had a correction, and now we're seeing a further move to the upside. What we'd like to see is this momentum continue, for this high to be cleared, and then strength to the upside. On the weekly time frame, we can see that price is between the 200 and the 50. The 200 is really flat. The weekly is starting to head up. So potentially we could see further strength to the upside. We may even have a bullish engulfing candle. If price closes out the week here, then we could have a bullish engulfing and then further potential further strength to the upside. On the daily, price came to a few pips of the 200 moving average. We know the 200 moving average acts as a level of support and resistance, so it's found support at a support zone. We can see that we've got some pivot levels here, pivot level here. So there's a whole support zone that price has bounced off, and we can see that price is really starting to gather momentum to the upside. What we'd like to see is this continue. Price clear 0.80, clear this high, and then we can start looking for some long opportunities. For now, you want to be cautious. If you are looking to take any trades, you want to reduce your risk. And I say reduce your risk. Full allocation of risk for me is 2%. If the markets don't allow for full allocation of risk, but there is still an entry point, then I would reduce my risk to 1% or 0.5%, maybe even 0.25%. Okay, let's move on. Euro, what that's doing now. The Euro Japanese yen, for some time now, we've been waiting for 120 to clear, and we can go back to February for that. So there's that move down of February, move up of March, move down of April, little move up to the upside of May, and we're now in June. We can see it's just really been going sideways. It hasn't really done anything. What we want to see is 120, that round number 120 cleared, and then potentially weakness to the downside. Interesting, below the 200, below the 50. But if you look at the 200, it's still heading up. We really want it to start heading down, telling us we are in a bearish trend. At the moment, it's still heading up. So this could be a fake out. But ultimately, we're below the 200, we're below the 50, and we're below the 200 and below the 50 on the daily as well. So we do have trend direction, trend alignment on the weekly and the daily time frame. But if you open up the daily chart, there's not really been going anywhere. Since March, it's just been going sideways. The overall trend is bearish, but we need it to clear that 120 round number. In addition, we want the trend to change. We want the trend to look more like this. This is a good trend structure. Neat moves, clean breakouts, small consolidations, breakout. That's the kind of trend structure that you're looking for. Okay, the trend structure in play at the moment, it's very deep, it's messy, it's choppy, it's ugly, it's not a very good looking chart. We are seeing momentum to the downside, but that means very little until it clears out of this consolidation. Look at the 200 heading down, 50 heading down. So it is heading down, but again, we need to see momentum. Right, pound. And for some time now, we've been waiting for price to really suggest further weakness, and we've been standing aside. We want this level here to be cleared, which is around 1.35. So 1.4 round number needs to be cleared, and this pivot needs to be cleared. Once these three levels are cleared, then we can start looking for shorting opportunities. If you are going to take any shorts in between, just be cautious. I know people trade ranges. Ranges are a very difficult environment to be trading. You don't want to be trading ranges. That's when you want to be standing aside and being smart with your money. If you look at the pound dollar on the daily, it's just going sideways. Choppy, messy, ugly, right? The last time I traded this was this trend here. If you compare this trend to the downside compared to what's happening now, there's no momentum, there's no trend direction. Okay, we are starting to see momentum to the downside, some significant bars as well. Remember, guys, we've got NFP out on Friday, so this is all in anticipation for NFP. That's another reason why you don't want to be taking any trades this week. Okay, you want to be more cautious during in the week NFP is being released. I know people don't want to hear that, and most people will ignore that because it's the adrenaline, it's the hunt, it's the chase of making money that gets people excited. But this is a business. It's not about a few pips. It's not about the adrenaline. It's about growth. It's about a lifestyle. It's about being smart with your money. It's about focusing on capital protection. It's about understanding your environment. It's about understanding when to trade and when not to trade. And right now, this is an environment you should not be trading. All right, so that's the pound. Still very much in consolidation. We need to see momentum to the downside. So not one that I'm particularly interested in. Now, the pound Japanese yen is starting to look interesting. Okay, so we can see now this is one of the first currencies that we looked at, which is trading outside of the pink lines. A lot of the currencies are trading inside the pink lines, telling us that there's not really a bias. However, the pound Japanese yen is trading below these pink lines, so we have a bearish bias. So I've been short on this for some time now, and I'm looking for further weakness. You can see that in recent times it's just gone sideways. Red, green, red, green, red, green. And where is it doing that? 160. What does 160 represent? It's a round number. Okay, so 160 is a round number. It's unsurprising. Now, if we look on the weekly, below the weekly 200, below the 50, okay, so we have a bearish bias and we have a bearish trend. But right now, it's just been going sideways, not really going anywhere. And if we look on the daily, below the daily 200, below the 50 is really flattened out. And that's, that's not surprising given how this is just oscillating. Okay, I've actually been short below 180. All right, so I think I have 3 or 4 positions. I can't remember. I've got 3 or 4 positions that are still open. So I've opened up 3 or 4 positions strategically. These are all still open. The last position was triggered on this bar here, which was the 22nd of February. That was the last time I took a short trade. That trade is still open. Frustrating part of trading where people don't really understand that this is natural to price. We can't expect price to just continuously go like this in one direction. That happens, it corrects, then it goes again, then it goes through consolidation. But look at what's happening now. We're seeing momentum to the downside. Okay, so price corrected to the resistance high. We're seeing momentum to the downside. What we want to see is a break and a close below here and further weakness. However, we got that 150 level as well. Once that 150 level is cleared, then we can see price go to 140. So we are seeing momentum to the downside. The average true range of the pound yen is quite a volatile currency. It moves over 200 pips a day. I think it was like 230 pips, I think, something like this. So, you've got to take that into account when calculating your stop losses. The euro dollar moves about 90 pips a day. The pound Japanese yen moves around 260 pips, over 200 pips a day. To manage your stop losses accordingly, you don't want to have the same stop loss for both currencies because they're different. Okay, the last currency we'll look at is the dollar yen. All right, and the dollar yen, all the yen currencies, they're trading outside of their pink lines. All right, so we have a bearish bias again, but again, look, red, green, red, it's just going sideways around the 110 round number. What we want to see is this weaken further. We want the 100 figure. We want this taken out, and then we want to start looking for shorting opportunities. If you trade it above 100, just be cautious. Now, the reality is this: you've got the weekly 200 to be clear. So once the weekly 200 is cleared, then you need to question whether you want to take trades above the 100 or below the 100. And that really depends on how aggressive or conservative you are. If we look at the daily, below the daily 200, the 50, well, it was starting to flatten out. Price is trading below the 50 as of now. We need to see this close and then potentially further weakness. Okay. All right. The currencies that I wanted to look at. I'm just going to go to the chat box. Are there any questions, guys? All right, so there's no questions. I don't know if there's people actually listening, but we'll continue just for people on replay. So what we want is to define an edge. And this conversation came about with someone I had on some forum that I had, and this guy was claiming to be a mentor, and he was putting screenshots of all his winning trades within the community, and I questioned what he was doing. I questioned why it was necessary to put up his winning trades, and he said, "Well, I'm a mentor, and I want to show people that how much money I make." I said, "Okay, fair enough." And then a risk management behind each trade, he wouldn't tell me. So he was clearly over risking and risking large amounts when he should have a very strict 2% rule. In addition to that, I asked him, "So what is your edge?" And his response was, "What is an edge?" This guy's a mentor. This guy trains people. This guy teaches people how to trade. And I asked him, what is his edge? And he said, what is an edge? Now, if you don't know how to define your edge, you probably don't have an edge. You have to have very clear rules on what defines your edge. Now, what is an edge? An edge is an environment where when you enter into, you have more chance of making money than losing money. You know, and I know that losses are all part and parcel of trading, even when you have an edge. An edge is just a slight advantage in your favor. So if you think of, let's say, the casino has 45% edge in their favor. That is why the casinos always come out on top, because they have the edge in their favor. We have to think like the casino. We have to develop an edge. Now, not only that, we have to develop a proven edge. We have to use features of the market that we understand to be proven to the market. So, for example, we know that the markets move in trends. This is a natural feature. We know that markets don't move in a straight line, but they move in a linear fashion. So we're looking for this. Okay, this is another natural feature of the market. We know that there is a natural feature of money flow. What does that mean? Well, money moves from FX to stocks to commodities. There's a natural flow of money. It's not in this particular order. It could go FX stocks, FX stocks, FX stocks, FX commodities, FX commodities, commodity stocks. There's, it can just bounce around, but ultimately there's a natural flow of money from market to market. We also need to understand that money moves in periods. The markets move in periods. What I mean by that is this. Over the summer period, expect the markets to go quiet. Expect the markets to go quiet. People go on holiday. Market makers go on holiday. Liquidity drops right off. Tend to be very quiet. So that means before summer, let's say we had a bear trend in progress. Then the summer months kick in and the markets go sideways. When the summer comes to an end and the market makers come back, the trends kick in again. Okay, so these are natural features to the market. These are to be natural features of the market. What you have, and the problem that most people face, is that during all of this, regardless of whether the market's in trend or in consolidation, people are just day trading. People are in and out on short-term positions, not really understanding the market environments that they're in, and then that's how they end up just seeing inconsistency. Okay, so how do I define my edge? Right, so the way I define my edge. Now, to define my edge, I use 3 time frames. I use the monthly, I use the weekly, and I use the daily time frame. All right, the monthly is where I look for support and resistance. The weekly is where I look for trend. The weekly and the daily is where I look for trend alignment. The weekly and the daily to be moving in the same direction. So if the week, I want the daily to be moving down. If the weekly is moving up, I want the daily to be moving up. If the weekly is moving down and the daily is moving up, then there is some kind of issue. And that is where you want to really be standing aside or potentially looking for a pullback strategy, right? But for now, on these 2 environments, which is we want the weekly and the daily to be moving in the same direction. So the monthly is where I look for support and resistance. Now, one of the elements I've already mentioned is those pink lines. So the previous high and the previous low. So this is of the previous calendar year. So this is the highest price and the lowest price of the previous calendar year. So that's 2015 as we're in 2016. So when the market is within this levels, I'm not looking to take any trades. If the market then comes back and then breaks to the upside, price now has a bullish bias. And the other way around, price has a bearish bias. All right, so this is the first point that I'm looking for. This is the first way I start building my edge, is looking at where current price action is in relation to the high and the low of the previous calendar year. All right. Once we start breaking out of these pink lines, this is where we start building an edge. This is where we have a bullish edge, and this is where we have a bearish edge. Now, as already mentioned, on the weekly and the daily time frame, I use the 200 moving average, and I use the 50 simple moving average. Okay, and I use this both on the weekly and the daily time frame. Right now, in a bull market. Let me just clear this up now. All right. Replay, guys, if anyone out there taking notes. Okay. In a bull market, here is the 200 SMA. Here is the 50 SMA. And here is price. In a bull market is where we start seeing a bullish bias, because price is trading and above the 200, and then we want price to trend to the upside. Okay, if we have and also notice the clock angle, we should expect the 50 and the 200 to start heading up, because price is also heading up. So this is also adds to your edge, seeing the move. I'm telling you now, if we have the 200 and the 50, so here is the 200 SMA, here is the 50 SMA. What we're looking for is price. And here is where price has a bearish bias. All right, because price is trading below the 50 and below the 200. Here, there is no bearish bias because it's inside. We want to see price trading below both to have a bearish bias, and we want to see price trading above both if we are to have a bullish bias. Price is interacting here and here. This is where you want to stand aside and not take any trades. Okay, so if we put the monthly, the weekly, and the daily together, so for a strong bullish environment to be above the annual levels, so those pink lines, we want to be above the annual previous calendar year. We want to be above SM, and we want to be above the 50 SMA. This is on the weekly and the daily. This is on the weekly and the daily. That is me now being able to define my edge. In addition to that, I want to be above the 52-week high. Yeah, something that you can use is the Donchian channel to represent that. Okay, so let's go to my chart. And let's open up the weekly chart right here. So if I go to edit chart, let's just bring up Donchian channels, apply, close. Let's remove that. I'm going to change this to 52 weeks. Let's just change the color. Let's make the upper red and the lower green. Okay, there you go. So you've now got the 52-week high and you've got the 52-week low. We need to see price breaking through the 52-week high and the 52-week low. So if price corrects to the upside, I don't want to take any trades until it breaks through the highest point on the chart, which is currently the 52-week high. We're starting to adjust now, but that's ultimately the 52-week high, around that level there. Okay, so we want to be above the 52-week high. And of course, if in a bearish environment, we want to reduce, we want to reverse that. So in a bearish environment, low, below, below, and below. All right. And that is how you define your edge. And it's as simple as that. What I'm looking for is ultimately this, right? If I was to draw this as a checklist, what I would have is monthly, weekly, and daily. On the monthly, I'm looking at the annual levels. There are other support and resistance levels that I look at, but we'll cover those in another session, okay? So support and resistance. Here I'm looking at the weekly 200 SMA, the weekly 50 SMA, and I'm looking at the Donchian 52. Daily, I'm looking at also the 200 SMA, the 50 SMA, all right? And then I'm looking for a breakout beyond Donchian 52. And what I want to do is be able to go through this chart and go, yep, 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 yep. Once I have all of that, I can take the trade. This is my edge. If, for example, you know, everything is good, but the Donchian 52 hasn't been broken, this is where I have two options. I can either stand aside, yeah, or if I want to take my trade, reduce the risk. And this really depends on a trend structure, how well it's trending, whether you're a aggressive trader. So these are the questions that you need to answer when you don't have your checklist met. Full allocation of risk, 2%. Partial risk, less than 2%. Okay, I hope that helps, guys. I hope that, you know, that brings a little bit of clarity to what I mean by an edge. You know, you have to be able to define your edge. As an edge. George Soros has an edge. The Turtle Traders had an edge. John W. Henry had an edge. Jesse Livermore had an edge. Most modern day private traders have no clue what an edge is. It's just gambling. And let me say this to you, a bounce. Look how many factors I'm looking for. You know, I'm looking for 9 factors. This support and resistance can be broken down into 2 further points. So I've got 1, 2, 3, 4, 5, 6, 7, 8, 9. I've got 9 factors that help me, that need to be met for me to have an edge. If you've got resistance, price comes off resistance and you go short, that's not an edge. You're trading on a single event. And if you get it right, it's lucky. But there's a very good chance that price is just going to go straight through that. All right, so that's not an edge. You want to have multiple factors that line up together that give you a high probability environment where you have more chance of making money than losing money. This is what trading is about. Anything less than this is not really taking advantage of you know, what the markets have to offer. Okay, guys, thank you all very much. Are there any final questions? I don't think there'll be any questions because I can't see any interaction here at the moment still. Any final questions? No. All right. Well, trendtrader.pro, if you want to take your trading to a whole different level, and this really is a level of the pros. You know, this is what all the best investors and traders have done over the years, which is long-term trading. Day trading is really an idea that's come about since the internet, and it's just sending private traders down the wrong route. Please start on this book, trendtrader.pro/ebook. It's a free ebook written by the amazing Anne Chapman. This is Anne is the lady that taught me how to trade. Okay, so my knowledge comes from a very reputable source. Okay, so I would look into this and study it. Follow us on Facebook, facebook.com, The Dynamic Trader, and also search for us on Twitter. All right, at Dynamic Trader on Twitter, and please add me on Periscope because I Periscope quite regularly. Okay, right, guys, thank you all very much. Take care. Have a lovely morning, afternoon, evening. Thank you. Bye-bye.